We have our good friend and great supporter of private placements, Rick Rule from Sprott here with us. Rick, thanks for joining me. We want to get right into it as we always like to do. It's been a crazy week for gold. We'll touch on that later on. But first, we want to touch on uranium a little bit. And for kind of the non, let's say, uranium investors, those who aren't familiar with the uranium story, can you give us Rick Rule's take on the, let's say, uranium investment thesis, the long-term fundamentals, and why you think it's a good play?
Sure. You've touched on one of my favorite topics, as you know. The uranium business has been extremely good to me over time. Emphasize over time. Anybody who gets in the uranium business needs to be a contrarian, and they need to have reasonable time frames. It's unlikely that anything's going to change by the next long weekend. But when things change in the uranium business, they really, truly change. Uranium bull markets, when they come, are the most dramatic natural resource bull markets that I've experienced in a 45-year career. Let's talk about what and why. The first thing is, to participate in uranium markets, one must absolutely be a contrarian. It isn't just that uranium markets haven't really performed since 2006. So it isn't just that people are bored of them because of their performance. It's also because a vast population in the investment universe hates uranium. When you talk about uranium to many people, they don't think about the fact that it contributes 15 or 16% of baseload power supply in the US. They don't think about facts. They think about Hiroshima, Nagasaki, 3 Mile Island, Fukushima. If you're a contrarian, the fact that an investment is, never mind unloved, but actively hated, means that you have found an attractive investment theme. Warren Buffett famously says that you get rich by buying straw hats in winter. You buy things that are out of favor. There is nothing in the world more out of favor than uranium. This is a commodity, and these are companies that are truly, truly on sale. Now, why would they ever recover if their particular attributes involve explosions, pollution, all of the stuff you read about with regards to uranium? The truth is that relative to other forms of energy, uranium is remarkably safe if you don't use it to blow up other people, if you use it to generate electricity. Safe enough that uranium is a substantial component of baseload, not variable, but baseload power worldwide, including in rich countries. There's a suggestion in the press that only people who can't afford any other form of energy go to uranium. But in what is ostensibly the richest country in the world, the United States, uranium still contributes 15 or 16% of baseload power. Importantly, this is baseload power that generates no carbon. Despite what many people think, uranium is a completely viable fuel with regards to the environmental concerns that people have and are expressing in the market today. But in addition to that, the economics are extraordinarily compelling, the arithmetic around the economics. So let's go through that. The International Energy Agency suggests that the fully loaded cost to produce a pound of uranium, not the cash cost, but the fully loaded cost, including cost of capital, project development, all those sorts of things, between $55 and $60 a pound. And right now, the spot market price of the stuff is $24 or $25 a pound. The contract price is a little higher. Suffice to say, at spot, the industry loses $25 a pound. Now, pretty obviously, this can't go on. So the thesis that people have to ask themselves as investors is pretty simple. Since uranium provides 15 or 16% of US baseload power, there's only two choices. 5 or 6 years from now, the price of uranium has to be at least high enough to justify the industry's cost of capital. In fact, it has to happen sooner in order to prevent supply disruption, or the lights go out. If People believe that 5 or 6 years from now in the United States, when they hit a wall switch and the lights are going to come on, they believe in $55 or $60 uranium. And $55 or $60 uranium, which in itself, by the way, is an interesting speculation were you to buy uranium, could generate a much larger increase in the share prices of uranium equities. The catch is that we don't know when the price will improve, and so we don't know when the equity prices associated with the uranium business will improve. What I know personally as a speculator is that in anticipation of the last uranium bull market, which occurred all the way back in the year 2000, 20 years ago, I was 2 or 3 years early, and I had my faith tested. When you're that early, you run the risk of being, in fact, wrong. In addition to the fact that it's psychologically challenging, it's also financially challenging. What you find, however, is that when the uranium price does move, the very small number of viable uranium companies available to investment means that an incredible amount of outside capital is siphoned into very, very few silos, and the share prices go up almost exponentially. I'm not saying that that's going to occur this time, but certainly if we had an echo of the last bull market, a shadow of the last bull market, given the very small number of juniors available, but the very high quality nature of some of the juniors that are available, one would expect that when the uranium price rises, you'll note I used the word when, not if, when the uranium price goes up, that the stocks would be very responsive. The second thing that your more sophisticated listeners, your private placement listeners, need to know about the uranium stocks is that there are a substantial number of very high net worth and ultra high net worth natural resource investors that remember the last uranium bull market. And I think what that means is that when the uranium price gives them a hint of hope, in other words, it doesn't have to go to 50, it has to go to 32 or 33, it has to threaten to go to 50. The flood of capital into the microcap uranium stocks from people like myself who participated in the last uranium bull market means that, unlike in other commodities, the stocks will lead the metal. You follow where I'm going with this? Mm-hmm. The anticipation, or rather the memory of the last bull market, is so extraordinary that the response of sophisticated high net worth and ultra high net worth investors in the sector, I think, pardon the pun, will be explosive.
And just as a point of reference, the last bull market we're talking about 2007, where we had $140 pound uranium. Right. Now, I don't think anyone's even thinking or suggesting that's what we're talking about here. Like you said, $50, $60 pound uranium is a hell of a start and a great way to move the markets. From a timing standpoint, what are some of these potential catalysts that can actually move this market and get some excitement going from, let's say, outside of the uranium fan club?
You know, Arash, the most important catalyst is already in place. Many people don't realize this, but the world has been on a tear building nuclear power plants in the last 5, 6, 7 years. Yes, we've shut some plants down too, but the plants that we've shut down are 40-year-old, 45-year-old plants that used a fairly small amount of uranium, say 250,000 pounds a year. They're being replaced with great big plants built primarily in China that burn 1 million pounds a year. Worldwide demand for uranium now is greater than worldwide demand was before Fukushima. Many people don't get that. The big catalyst, of course, would be increasing the pace of Japanese restarts, which we have not seen, and probably in the very near term we will not see as a consequence of an economic slowdown related to the coronavirus. But the truth is The political constituency, Japan Inc., the Japanese governments, and the big companies in Japan believe in energy security. And the amount of electricity generated by a small amount of fuel means that in terms of energy security, the only alternative that the Japanese have is uranium. You can't store enough coal. You can't store enough liquefied natural gas. You certainly can't store enough rain to power Japan in a way that gives them the energy security that they want. The second catalyst that's in place for uranium has been a real conversion in the last 2 years of the responsible, economically oriented constituency in the environmental community to understand that with regards to climate change and with regards to carbon, that the ability to generate economic baseload power while generating no carbon means that nuclear power is a critical part of the world's energy mix. Bill Gates, the world's leading philanthropist right now, goes so far as to say that the key to managing climate is nuclear power. So there is a groundswell of support for conversion to nuclear energy among constituencies that have never been friendly to uranium in the past. Supporting this has been a real increase in technologies around efficient nuclear generation and smaller, more modular, in some cases even floating plants that can address power needs in communities that the nuclear power industry has never been able to service before. The truth is that the catalysts are in place, but these catalysts play out over time.
Sorry,
go
go
ahead.
ahead.
No, Arash, please.
Well, I was going to say it sounds like you said, it's not a question of if, it's when. There's so many. I mean, it's like discount shopping right now, right? You can start from the very top as far as top producers and work your way down, and there's price slashes all over. So you would think, okay, let's start putting together a nice portfolio of uranium stocks. But like, what could go wrong, I guess, is what I'm saying. Is it just a question of how long can you wait it out? How long can you wait for things to move?
Yeah, the risk is not with the uranium industry or the uranium stocks, although stock selection is always important. The risk is the psyche of the buyer, right. of the uranium buyer. The truth is that human psychology works against human investment performance. We all have time preferences, and we act as though our time preferences matter. But the truth is, the market doesn't care about our preferences. Our bank account doesn't care about our preferences. The stocks don't care about our preferences. I'm an investment manager. I don't give a damn about your preferences either, as a matter of fact. It isn't so much what we want as what we can have. And interestingly, price action validates a narrative, which is to say, as a sector becomes more and more highly valued, that is arithmetically less attractive because you're buying the same unit of economics for a higher price, it becomes more attractive. Think about this. You buy a stock for $1. Nothing changes with the company. Maybe there's a newsletter write-up. The stock goes from $1 to $2 with nothing changing at the company. While you like the fact that the stock went from $1 to $2, arithmetically, it's precisely half as attractive. What happens with people is that price action justifies the narrative. In the last uranium bull market, when the price of uranium went from $8 a pound to $20 a pound, that is almost doubled, there was interest, but no stampede into the sector. The price of uranium still had to go up because it was estimated at that point in time that the worldwide median cost of production was $30 a pound. So although the price had reacted a bit, nobody cared. When the price went to $50 a pound, that is, when the price didn't have to go up anymore, the price action in uranium justified the narrative. And precisely when the industry outlook didn't have to get better, the uptake by investors became insane because the narrative was justified by the price action. In this circumstance, the market that we're looking at in uranium now, I think that the upside is probably less extraordinary because I don't think it's likely that the price of uranium goes from $25 a pound to $200 a pound. In other words, I don't believe in terms of the upside that passed as prologue. What I do think is that the memory of the last bull market is strong enough in investors' minds that less price incentive is going to be needed to justify the narrative. In other words, the reaction will come sooner once the catalyst is in place.